With Tesla stock reaching $900, the short sellers are in big trouble. In this video, I'm going to talk about what's going on with the short sellers right now, including Mark Spiegel, Jim Chanos, David Einhorn, and Gordon Johnson. Let's start with Mark Spiegel. At the end of 2019, Mark Spiegel announced that he was cutting his Tesla short position from 20% of his fund to 10%. However, since then, Tesla stock has doubled. As a result, Mark Spiegel's Tesla short position is now back to 20% of his fund. In this coming quarter, we're expected to see him cut his short position again, from 20% of his fund back to 10%. As of today, Tesla's short interest still sits at 25 million shares. Yesterday's gain of almost 20% saw the Tesla short sellers losing $2.5 billion. In total, Tesla's short sellers have lost a massive $20 billion, and this loss just continues to increase as time goes by. At one point, these short sellers are actually up $5 billion. But the majority of these short sellers held their Tesla short position because they truly thought Tesla was going to zero. At one point, they were even as ridiculous enough to put a $10 price target on Tesla. All these short sellers are basically ditching the media right now, and they're not talking about what they're doing with their Tesla short position. But we do have a clue of what Jim Chanos is doing with his Tesla short position right now.
How much longer can you keep the Tesla short on?
Oh, I think most short positions you can keep on indefinitely. There's no time frame on them. It's just a matter of price and your willingness to hold and either take temporary losses or book profits. So there's no time frame on a short sale.
If Jim Chanos was true to his words, he would actually be holding his Tesla short position right now, despite his massive loss. Since June 3rd, Tesla short sellers have lost 4 times the money they put into shorting Tesla. We had a clue from Mark Spiegel that his Tesla short position was in the 7 figures. That means for every $1 million, he would have lost $4 million.
Monday. Now, before we start, let's disclose each of you what your stakes are here financially. Mark, we'll start with you.
Yeah, so we're
shorted stock here.
Yeah, we're short Tesla via outright stock, and we own long-dated puts and some short-dated puts. And yeah, it's a 7-figure dollar amount of stock that we're short.
And now let's talk about David Einhorn, who famously shorted Lehman Brothers, but it doesn't look like he's going too well right now. Einhorn is a famous Tesla short seller that really got a lot of fame for this following clip.
Today, I'd like to talk about planes, trains, and automobiles. Let's start with automobiles. Napoleon once said, "Never interrupt your enemy when he's making a mistake." So I won't. Just watch the screen. That's a lot of horse.
And unfortunately for Einhorn, just in January we saw him post a humongous loss. His fund, Greenlight Capital, was already down 10% in the 4th quarter of 2019. In just January, we saw the fund drop another 7.6%. His fund is currently worth $7 billion, so this would be a $532 million loss just in January. We already saw Einhorn's net worth drop from over $1 billion to $700 million. Now, with these losses, we could see this net worth drop even more. Another short seller, Gordon Johnson, is also seen losing tons of money and even losing his job at Vertical Group. We actually saw him pretty recently spewing out these horrible arguments about Tesla.
Gordon, I'm going to start with you. Your strongest case.
Right. So Elon Musk in February of 2019 said that Tesla was going to deliver 420 to 600,000 cars. The number came in at 367.5. If you look at Europe as over the first 29 days of 1Q20 versus the first 29 days of 4Q19, sales in Norway, Netherlands, Spain are down 40%. That's over 50% of their demand in Europe. U.S. sales last year, total Tesla cars sold fell 3%. Model 3 cars in the fourth quarter fell 32% year over year. And you have a pandemic breakout in China, the likes of which we've never seen, which is going to significantly dent their ability to sell cars in China. And then lastly, back to Europe, they're building a factory to make 500,000 cars, and they only have 8,000 cars in transit on boats to basically Europe, China, and South Korea. The same number over the same amount of days last quarter was 23,000, 63% fall. I think they have a big demand problem. I think numbers tonight are okay, but I think you're going to have a lot of one-time items like, FSD revenue recognition, credit sales, et cetera. And I think they have a disaster of a year in 2020 ahead of them. And I think you're going to hear some of that tonight when they talk about 1Q.
And people like Gordon have never been proven wrong more and more times again in a row.
Can I jump in there? So when you say I've been proven wrong, Tesla, over the past 10 years, every single year, they've lost money on the net income line. Over those 10 years, they have a cumulative loss of over $6 billion, despite billions of dollars in taxpayer incentives. And it's just factually incorrect. They haven't generated free cash flow over the past 5 quarters. I don't know how you're defining that, but when looking at operating cash flow less CapEx, that's just factually incorrect. We'll see what happens this year. But when looking at the facts and not looking at an aspirational story, demand for their cars is collapsing in Europe, the USA, and China, as well as, pretty much every other locale. And you're going to see that in 1Q. 4Q, they did about 111,000 in deliveries. I think that number could be as low as 80,000 in 1Q. They're selling 367,000 cars a year. VW is doing millions of cars per year.
The fact of the matter is, if the stock price is going up, then the shorts get squeezed. And that's what we have. We have indeed. That is also a fact that we have seen that happen, that the people who have sold this stock short,
right, it's
been problematic. And
but we used to talk a lot and debate a lot at Bloomberg, right? Look at Tilray stock. It went to 300. Fell to 12. Look at Sun Edison stock. Remember, we used to talk about that. It was at 30, went to 0. No, stocks get dislocated from reality, which Tesla is right now. It reminds me of the tulip boom, where people were paying hundreds, thousands of dollars for tulips, risk adjusted for currency, back in the 1600s. You have these bubbles in the market, and that's what this is.
After leaving Vertical Group, Gordon Johnson actually went out there and created his own hedge fund. This hedge fund is actually already down 1.4%. And realistically, it's probably down a lot more right now, but his performance just isn't updated yet. In this fund, he shorts a multitude of stocks, but the most notable one here is Tesla. Gordon has reiterated his sell rating so many different times, and he's down such a huge amount, I'm just sitting here wondering when he's going to reiterate his sell rating again. But on the other hand, for us Tesla bulls, we're making loads of money, and the biggest bull out of us all is none other than Elon Musk, who has seen his net worth increase $13.5 billion just in the start of 2020. And even individual investors like me are making a whole lot of money. My initial investment started at $25,000 to $30,000, but it has already risen to over $120,000. And this number just continues to increase as time goes on. So where is Tesla stock headed in the future? According to ARK Invest CEO, the stock is still undervalued and it could still increase by a lot in the next few years.
Remind me again, 4,000 by when?
Well, we are in print, actually. We don't even talk about this number. It's a 5-year time horizon.
Okay.
Originally 4,000, but when we did our next run at the model, we came out with 6,000. We've just completed another run.
Wow, okay. So it does beg the question. This is a company that's only a handful of quarters been profitable. How do you apply that value? How do you get to those numbers?
So we are focused on the electric vehicle market, first of all, and how quickly it will grow. We think that from 2 million units last year, we'll be at 37 million units. That's about a third of the total auto market in 5 years, 2024. Originally, we thought in our bull case that Tesla would lose a third of its market share. So its market share was 17% last year, so we thought it would go down to 11. It has not been losing market share. And as we're looking at other auto companies, seeing how far behind Tesla they are, we're beginning to believe they may not lose market share. which is a huge change in our assumptions. And that's even before autonomous. We're not even talking about anything autonomous right now.
At $6,000 a share, Tesla has $1 trillion market cap, if I'm calculating that correctly.
Yes.
The two companies right now that have that are Apple and Microsoft. They are very, very nicely profitable. Do you expect that Tesla will have to be very, very nicely profitable within 5 years to hit that market cap?
We believe it will be very nicely profitable, and it's not going to be profitable just because of electric vehicles. We think the margins on electric vehicles are going to be much higher than most analysts anticipate, but it's going to be because of their autonomous taxi network. We believe they're building out an autonomous taxi network, that it's on the drawing board. And those margins are software as a service like margins. So in the 80% range instead of the 30% gross margin range. So yes, and because auto analysts are auto analysts, they can't see this. This is a software as a service model. This is nothing that traditional auto analysts are used to analyzing.
As of right now, Tesla stock just continues to increase, and it doesn't seem like it's going to stop. If you enjoyed this video, please like and subscribe. I hope to see you in another video.